Welcome to the Treasury Update Podcast, presented by Strategic Treasurer, your source for interesting Treasury news, analysis, and insights in your car, at the gym, or wherever you decide to tune in.
As 2024 comes to a close, we wanted to take some time to look back on the past year, what's changed, what's new. To speak on that today, we have Craig Jeffery, Managing Partner at Strategic Treasurer. Craig, welcome back to the show.
I am glad we're talking about 2025. This is a good topic to have an outlook on where things have been and where they're looking to head.
Yeah, so some of the things we're going to touch on today is technology, private equity and acquisitions, the economy, as well as a few other things. So Craig, do you want to start us off with a review of what's happened with the economy this past year?
At the beginning of the year in the U.S. and in many countries looking towards an election at the top of the particular nation state. The U.S. was no different. Presidential elections this year. There's always a bit of a hesitation in the economy in election years, and that seemed to hold true. There were a total of three different rate reductions by the Fed, 50 basis points, and then two additional 25 basis points, so dropping the rate by 1% for the Fed funds rate to meet their double objectives. And this was the expectation at the end of the year going into 2025 is instead of 4 rate reductions expected in 2025, there'll only be 2. So
why do you think that was a surprise to people? I mean, we had people on our podcast that predicted slowdown in rates next year, the exact rate cuts that happened, and still the markets acted surprised when they announced that.
Well, there's millions of different brains with different objectives, and some look at what's coming in different ways. So any given year, some people will be right and some people will be wrong. So this really tracks with what oftentimes is the case. There's the expectation going out a year or two, and then there's all the adjustments that happen. We can look at what the market's expecting. We can look at what people think and the reasons, and then reality comes and there's changes that are made to those expectations.
Interesting. And you want to touch on the impacts of the war that's continued over the past couple of years?
Russia's war of aggression on Ukraine continues with Western Europe in particular supporting it. Same thing with the U.S. supporting their defense against that. That's continued and dragged on for a long time. As you know, as most people know, Russia has received quite a bit of weaponry and ammunition from North Korea and Iran. North Korea has also sent in some troops who are sometimes being exposed to Western devices like social media, TikTok, alcohol, and they're having an impact on the battlefield, and many of them are dying as well. So that's continued. The impact is, I would say it's fairly moderate globally on what's occurring there. It's still staying contained within Ukraine and in parts of Russia. Some of the battles in the war with Hamas and Israel, the IDF, continue. Neither of these seem to be expanding outside the area much, outside the region. And so they're all, from a global perspective, I would say it fits in the more than light, but less than moderate in terms of where conflicts range. It's not there's not global wars going on. It's not light that there's nothing occurring. So it's somewhere in that range from an impact on the economy. Certainly, depending on where you're sitting, will depend on how impactful that is. If you're in Israel, if you're in Ukraine, Poland, the concerns, et cetera, when you're nearby those, the concerns are greater than the overall impact economically in the world.
Looking forward to 2025, what do you think will have more impact on the economy from a U.S. perspective? The wars and how they'll develop, or the proposed new tariffs and new regulations that are coming?
I think in the very short term, new tariffs could have a bigger impact on the economy because Donald Trump has mentioned Canada, Mexico, China, hasn't really talked about Europe too much.
Becoming a new state.
Yeah, becoming a new state. That's he does a little trolling for sure. That's some of those comments, which I think at this point everybody realizes he's trolling on those. On the tariffs, he's certainly laying out some markers there. It's part of his art of the deal, trying to negotiate certain things. If the goal is to truly get more fair trade, to stop certain types of illegal immigration, I think he's made the point fairly clearly. I was surprised to see 85% of terrorist immigration comes through the Canadian border. I had no idea that it was that high. There's obviously more immigration coming through the southern border with Mexico and the desire to stop fentanyl. So there's a number of activities there trying to get trade balanced or done more fairly is ostensibly what he's saying. And then the issues of fentanyl and particularly terroristic immigration seems to be another key component of what he's doing. So we'll see how that works, how all that works out. Is it short-term disruption for longer-term better positioning? Hopefully that's the case.
Anything else on new regulations to be aware of?
New regulations are as certain as death and taxes. I think what we can look at is the first Trump administration saw eliminating regulations in greater numbers than new regulations being added. And I think that's his essential promise. He's also had quite a few conversations about making it so it's faster to get approval for businesses over time. And so it's that pendulum between the Wild West of no regulations, anti-regulative state, and a hyper-regulated state. So I think it's moving from the heavier regulated to the lighter regulated. That certainly seems to be the case over the next few years, depending on the industry, but certainly seems to be the case and what his platforms are indicating or pointing to.
Yeah, and Push, our writer at CTM File, was mentioning he's writing a new article on tariffs and regulations coming. So I think that will be out sometime in mid-January on CTM File. So take a look over there. Stay up to date with the news on CTM File. And what about BAM, FBAR, and BOI?
I guess the key thing on bank account management, foreign bank account reporting, and beneficial ownership information. FBAR has been around for a while. The reporting for activity in non-U.S. accounts has been there for quite some time. So not too much new in that front. Bank account management, generally, people are more concerned on the security side, are paying more attention to portal management, how they're managing accounts. When I say they're paying more attention to it, it's a certain percentage are increasing their coverage. There's always been, it used to be, 20% paid close attention to it. Now it's closer to 50% are paying close attention to it, managing it carefully. That number's picking up each year, which is significant. BOI, or BOI for beneficial ownership interest, is a new reporting requirement. So we've talked about this. We put out different articles on that. We'll include some of those in the show note to explain what beneficial ownership information reporting is. This is part of the Corporate Transparency Act, a U.S. regulation designed to stop different types of financial fraud by having transparency into who owns which companies. And so beneficial owners are identified as those companies, those individuals that own 25% or more of certain types of companies. There's a requirement to report that anytime there's a change, anytime there's a new company. What was really interesting, today is right near the end of the year. Everything was to go into effect January 1st, 2025, meaning, you have a new entity, you've got to report it within 30 days. If you've made a change, you've got to report it within a very short period of time. There was a lawsuit, and that created a delay of enforcement of that. The expectation was that it would be a year or a delay until a court case is decided. There was also a baked-in year delay into the larger budget bill that was being contemplated. Well, that got scuttled. That 1,000-plus page document had those delays built in. The more streamlined version didn't have that, and so it's gone through, and so there was no change from the budget bill, so Congress didn't create any delay. Now, by today, by the 27th, the court had to decide whether they would put a stay on the delay that had been placed by the court case. So what happened is any pre-2024 companies that were formed then have to file BOI by January 13th. right? So it's a few days later. For companies that were formed September 4th, 2024 to December 23rd this year in 2024, they're granted an additional 21 days to do their filing. So they've got a little bit more time. Post 2024, so any company that's formed January 1st, 2025 or more still has the 30 days. But all that's to say is that Treasury groups, accounting groups, or legal groups have to make sure that bank account information reports are filed on time. Just like foreign bank account reporting, this is necessary. The idea that we'll continue to follow the procrastinator's delight, which is don't put off to tomorrow what you can put off to the day after tomorrow, means you can't, you might have an extra 13 days to do that. So you need to identify which entities need to file and get those filed.
As we move into the technology side, do you want to go through some of the developments we've seen over the past year on APIs and AI?
Yeah, if we look at what are the biggest trends or innovations that are taking shape, being adopted in 2024, and as we look into 2025, number one seems to be pretty clear that it's AI, generative AI, and machine learning. That's expanding with many of the technology providers. It's being built into their systems for forecasting, fraud control, any type of anomaly detection. We see that happening at the bank side, the financial service provider side, payment processors continue to add that capability to reduce fraud, provide better analysis. That is, I would say that's certainly going to be the number one development, change, and impact on Treasury and finance in 2025, probably in 2026 as well, but I would be very firm on that. Number two is the ongoing years of APIs. The adoption continues to grow. We see that, John, we see that more heavily with some of the primary banks who continue to add different, API sets. Those are being integrated, embedded in various technology providers, from accounting platforms to ERPs, treasury management systems, payment hubs. Those are being embedded in those systems for information reporting, even for payments. So that's expanding. That's certainly coming with a focus on the largest banks. We haven't seen as much on the smaller banks. We expect those to come through the technology providers that provide support for the reporting and processing elements of banks. So the large providers that run systems, when they roll out their updates, it'll have that functionality and will reach the next tier of banks, as opposed to the $1 trillion banks or the extremely large banks. If we look at what's happening with technology adoption, we continue to see what we would consider above trend line adoption of treasury management systems down into smaller companies. There's still a replacement going on. We don't expect that to continue for too much longer above trend line, because many systems have been replaced. Companies that were using homegrown systems are now putting other systems in place. So TMS systems, payment hub providers, treasury aggregators, which have payment hubs, we expect TMS still to be above line in 2025, and payment hubs, treasury aggregators, we expect them to be above line for at least 6 to 8 more years, based on what's changing in the payment world. And some of those on payment security, features, functionality, and integrating services that help with validation, sanction filtering, all of those are coming in much more heavily and much more rapidly. The driver being payment security. Companies are far more concerned about payment security than they've been in terms of actually doing things about that. So they've been spending, now they're spending more, they're paying more attention, making more changes. So those are some of the tech advancements and shifts there.
Yeah, a lot going on there. Most of it we've talked about in the past, but the new stuff with generative AI is very, very interesting. And I'm wondering if in this next year we'll see a lot more, regulation within each company, going from more open source to closed AI, whatever you'd call it, where it's all internal. Because there's a lot of not skepticism about using something that could share your data.
Yeah, even if it's shared at some kind of aggregate level, it could be key information that you don't want out there. It's not going to be account numbers per se, but it's information you don't want. That's going to be a key piece. I think the other aspect too that it'll be interesting to see how this shakes out is, AI is trained on large data sets and is trained on, data that's in the internet, and there's not credit or attribution given to that. So if it scrapes and reads reports and data and uses that to create a derivative work without providing value to it, isn't that violating some copyright rules in some way? And
Yes.
so that'll be, it is.
And who's making money from it?
Yeah, and so it's kind of like it creates an interesting situation because it's like I learned from everything you wrote, but then it's like there's no attribution given, and now I'm making money by using that insight and data without any form of compensation or even attribution. So that's going to have to shake out as well. It's a different thing for a company that's training a system on their own data to make better analysis. That's not going to cause a problem, other than you don't want that, the insights to get outside your company, and there's ways to resolve that.
Yeah, that'll be interesting. I think that'll be a big topic as we move into 2025. What about on the private equity side and acquisitions for fintechs?
There's been a significant number of acquisitions in 2024 and investments, mainly investments. There's still quite a bit of cash out there looking to find a home where they'll receive above market returns. And there's quite a bit going on. I'll mention a few of them. TradeWeb completed the acquisition of ICD in August of 2024. That was announced in April. This expanded their offerings, from electronic trading, access to different markets, and data analytics. So that was one key player, ICD, the investment portal. Kyriba's had new investors. The Kyriba, the TMS vendor, got an additional investment from Bridgepoint, another fund in Bridgepoint, taking out one of the earlier funds, as well as General Atlantic did that and completed that in mid-October 2024. That should close soon, right around the end of this year, very beginning of 2025. Treasury 4, a TMS and a legal entity company, legal entity management and workstation, got funding in late 2023 from Westpac, a Series A funding, $20 million. And we saw that flow through into products, expansion, and growth of Treasury 4. This is not private equity or acquisition, but JP Morgan Payments Partner Network saw different increases with some of the different fintech providers in that space. So they're formalizing how they're doing connections. Worth a read by going to the JP Morgan site. Panex got $10 million in May. TIS got a major investment from Marlin Equity Partners in March. And Necto, the very end of 23, got $8 million from multiple partners to continue to fund. The space has been active. There's more funding. This idea of greater returns should be expected. As we look at this, it's interesting to see how private equity and other companies are investing. Are they investing in firms that are earlier stage but on the newest technology? Or are they acquiring firms or investing in companies that are more mature, have a larger client base, and more significant cash flow? I think we're going to see how that changes over time. The newest technology, you can develop things more rapidly, but you don't have the customer base. So there's the trade-off there. And let's just call it the smart money is looking at both of those elements. So a lot going on, and we do expect that to continue. There's still a lot of money on the sidelines that can come in.
And any final thoughts you want to share with our audience as we move into 2025 this week?
Yes, as you look at 2025, it seems to me that treasury groups, finance audiences need to look at what's going on with technology, what's going on with their staff, and payment security, protecting your payment processes. Those tend to be very, very significant, and they interrelate. The use of technology, the use of AI and machine learning, how is your staff developing? All of those, I don't know anybody who's not thinking about each of those topics, at least at a moderate level. And many, many companies are looking at those at a heavy level. And there's good reason for that. So as you think about what are your plans, make sure you're considering those pieces in what your initiatives are, what you're focused on in 2025.
Very cool. Well, thanks for sharing your insights, and thank all of you for listening to our podcast over the past year. We look forward to sharing more with you next year.
You've reached the end of another episode of the Treasury Update podcast. Be sure to follow Strategic Treasurer on LinkedIn. Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.